Hello, everybody. Joshua Hayes at BigWaveTrading.com. Thursday and Friday can only be described as very bullish. Breadth thrust, advancers and decliners, new highs compared to new lows thrust, and the amount of signals that I've received are it's just overwhelming. Are they great signals? No. I'm still missing my grade A signals. Now, this past week, I got a couple of quote, quote, grade A can slim signals. Unfortunately, it was one day before earnings on both of them, but both gapped up, were big winners. Big winners. Could have done the gap and go. The gap, pullback, VWAP recovery and go, reclaim methodologies on high quality can slim names. And the other thing is that I also got a couple of my kind of grade A signals, but once again, both of those stocks also had earnings within a few days. I took all four, and all four happened to work. So that is also another slight, subtle difference in this current market uptrend. Things are starting to work than not work. Now, later on, actually, here in just a little bit, I'm going to show you the tickets indicator in relation to where the SPY currently is. It's how I judge the strength of the market short term. Seasonality wise, we should expect the market to pull back or consolidate next week, and then it turns bullish again for March. But I want to let everybody know, just looking at price, volume alone, I'm going to remind everybody, I know it's a little bit difficult to see. I know there's a lot of stuff here, guys. I'm sorry. Remember, it's tertiary, quaternary with me. I'm always looking at price volume, in case you did not know, but these are excellent guideposts. I know how to quickly look at them, but I know if a lot of people look at this chart, it looks like a mess. But trust me, all you need to know is that during the entire downtrend, these little blue line spikes, these are called pocket pivot point signals. I can't even remember the last time I've even seen a flurry of them like we did, going all the way back to pre-COVID when the market was in a strong uptrend. Even off the COVID 2020 lows, we didn't see quite as many pocket pivot point signals. They also all happen to be follow through days. So very, very bullish short term. And we came down and look at where we found support at the 100, 150, 200 moving average, got back above the 50. Now we're back above all the short term moving averages. And the TTM trend momentum indicator is curling up. This is all positive. Also, it looks like that MACD and TSV is going to curl higher. Chaikin money flow has remained green. So this is a very strong current market. I welcome pullbacks and I welcome being wrong. I to be honest with you guys, I hope I am wrong. I was going in my long-term portfolios, I sold them out in 2021, half of them. I went from 100% cash to 50% cash. I added at SPY 400. I added back at SPY 380. But my big load was going to come with a SPY close below 350. Well, I pretty much nailed the bottom, didn't I, guys? SPY got to 348, but it only did it intraday. However, I'm still open-minded for a possibility of a pullback. I actually welcome it for my long-term portfolios. But if I get SPY 370, I'll consider that a gift. If I don't get any of that, I need the Fed to go to quantitative easing, and then I'll just play catch up. And you might think, well, what if the SPY is at 440 or 450? Well, if the SPY is at 1,000 in a few years, 450 and 440 won't look that bad. And I know that may sound ridiculous, but if this market is like the 1970s, the market bottomed in 1974, interest rates went all the way to 20% into 1982, and then, or I can't, yeah, it was 1982, and then they paused and they started to cut, and that's when the stock market exploded higher. The same thing happened in 1994 when the market kind of chopped around while the Fed was hiking interest rates. Then they paused, market was rallying, and then they cut, and the market exploded higher. Were you chasing then? Either time? Probably not. So with that being said, though, the one indicator that I've always used that's always aligned with the times that I can really press and just be aggressive, and I mean aggressive with my new long positions. I'm talking 100% all in on a long signal if it's grade A. It's when this time segment volume indicator is green, and when they're green with MACD and Chaikin money flow on a monthly basis, great things happen. 1995 to 1998, the 1999 uptrend, the 2003 bull market leading into 2005, this period here in 2007. Then you can see after the bottom, the 2009 into 2012. And you'll notice since then, there hasn't been as much green compared to red, but it does happen to line up with 2013, which was a great year for me, and 2017, which was a great year. And we came out of a monthly tight squeeze with the resolution to the upside. And then once again in 2020, no surprise, to the early, or actually latter part of 2021, when the time segment volume is green, that's when the best things happen. That's when my best gains happen. That's when the best setups happen. Is the TSV green yet? We got the TTM trend momentum slingshotting. That's a start. Chaikin money flow is still green, going in the wrong direction though. This looks like there's a curl here, but we're still red light on the TSV. Now, let's get a little bit more granular and get to my toss charts. All right, so we're going to start it out with the weekly on the SPY. This is the tickets indicator. When it's above the zero line, good things happen. When it's below the zero line, bad things can happen. You can see we go below the zero line here. What happens next? Sell off. We're still below the zero line on the SPY. So technically, this is not a raging bull market yet, which is also why when we got above the 50, we probably came back down because per this indicator, we should not be above the 50 SMA, which is this line, if this indicator is below zero. Yet that's what happened. That being said, remember, we found support at the 200. Until you're below and stay below the 200 and crack the new lows, you're not in a secular bear market. And I tell you what, guys, if this is just a cyclical bear market and artificial intelligence is the internet 2.0 on steroids, basically, is what I think it will be regarding profit margins, productivity, return on equity, earnings per share, I think you're going to see an explosion in corporate profits with artificial intelligence, similar to what you saw on the internet, if not way more. So if that's the case, this lines up perfectly with us finding support at the 200 weekly. But if things don't get worse, if inflation doesn't get out of hand, if the consumer stops spending money, if things just fall apart, we've got to stay below the 200 and completely roll over. Until that happens, especially with demographics not topping out with population growth in the United States of America until 2034, that lining up with artificial intelligence, it's hard for me to be too bearish. But on a weekly time frame, we're still early if we have bottomed in October. So now let's go to the daily time frame. On the daily, we can see that we're still above the zero line, but the daily isn't that effective. That's why I like to compare it with the weekly, and then more importantly, the preferred time frame for this indicator. We'll do this one, the hourly. You can see here when the SPY is below the 50 SMA on the hourly, the tickets indicator is above zero, bounces back above, hits the 50, bounces off of it. 50, bounces off of it. A little bit below the 50, bounces off of it. Now notice here, when we go towards the 50, what's the tickets indicator doing? Coming towards the 10. No bounce, roll over, above the 50, fail. We're now back above the 50, tickets indicator still below zero. I would like to see us come test that 50 SMA, and the tickets indicator get above zero, and I would be looking to get long SPY off this 50 SMA on the hourly. All right, everybody. So I'm going to try to go over this really quick, but what I wanted to show everybody is that what you see here is FSLR. You can see this white triangle. Just to let you know, this cannot be manipulated. Once I get long, I add it to Telechart version 7, and the arrow shows up. This is considered a grade A can slim setup. Off the 50, pocket pivot point signal, increase in BOP. I don't have time to show it, but the TTM trend momentum and everything was lining up. We were in a tight squeeze, but we had earnings the next day. But still, you can see that it worked. AXON, you can see when I initially went long. This is a grade A can slim setup. However, once again, earnings the day before, but you can see it worked. I also want to show you that VRRM, if this would have been caused by earnings this day right here, after this gap up, but it wasn't said because they were being added to the S&P index, I would say this is a grade A earnings winner setup. However, it wasn't the case. Earnings was coming up. I went long anyway, and that being said, VRRM is working. SCPL, same thing. This move off the 50, volume truncation, max green BOP, pocket pivot point signal, normally a grade A signal, but earnings were coming up, still went long, and it still worked. All right, I bring that up to show you guys what a grade A signal should look like. Slow the video lesson down, look at what the volume and BOP is doing. We don't have time to really go deep into it. I've had it on other video lessons if you want to watch my past video lessons, but I want to show you guys that there is another stock that's got a grade A, quote, quote, setup on the can slim side. Once again, I'm already long DKS, but pocket pivot point signal, right off the 50 SMA, small increase in BOP, increase in volume. The problem is DKS has earnings on Tuesday, so it's going to be risky. But that being said, this is what a grade A setup would look like. Too bad it has earnings, just like FSLR off the 50. Too bad it had earnings, just like AXON off near the 50 and SCPL off the 50 before earnings.